What's up, everybody? It is July 25th, 2024. It is 4:02 in the afternoon. The market is closed. And boy, was it another doozy of a day. This time, both down and up and back down. But awesomely enough, the majority of the people, at least the people that trade with me during the day, were done early today because we found some bangers of trades going to the downside. We caught a couple of good ones to the upside. And because most people know by now that the more they trade, the less likely they are to keep winning, I'm convincing more and more people to be done after they've made good money. I don't know why you would want to work longer than you have to. But anyway, let's go ahead and launch charts and see what we had going on today. So just for the record, I was done and relieved of my duties from my community members by just before 11 o'clock this morning. It was a fantastic day. Unexpected. I didn't think we'd have a big ranging day, but we did, and we caught good portions of it. Entries are the key. There's good reasons to take exits a lot of the times where we take them, but there's also plenty of room left in some of the moves that we get out of early. I just want people to be very, very clear that I'm not looking to try and catch the entirety of every single move. I'm fortunate enough to be able to play a position size that even if I catch a smaller portion of a given move or expected move, I can make good money. I can make enough money to pay my bills, and that's my goal, right? If your goal is to sit here and trade all day long, just know what you're supposed to be looking for, and also know how the mechanics of theta work well, because later in the day, theta is a different animal altogether. And those pullbacks that you get late in the day that go against you, they hurt a lot more than they do in the morning. All right, so just be aware of that. Me personally, I don't trade after 12 o'clock 99.5% of the time. So we had our pre-market range right here, 539.97 up through 540.97. So basically a dollar range. We had a call line scenario up at 541.72, and a put scenario if we breach below 540.97. So our pre-market high, we wanted to consider puts there. We want to make sure that the Qs are getting below support, which there was their pink line. Everything lined up for this to be a reasonable entry. Now, ADD wasn't doing much of anything at the time that we got into those trades. We got into them at 9:33, so at least ADD was printing red. But we breached that line, and where were you looking? Pink line. The pink line held for a few minutes. It actually held for about 5 minutes, bounced off of it, and did not make a higher high. We made a lower high in relation to the open. Now, I want everybody to know that I was also relatively excited at the idea that we might be able to play calls today. If you remember, the last 2 days in the market have been pretty red. And I wasn't expecting us to rocket ship up today. But I was pretty okay with playing calls. In fact, I was a little disappointed at first that we weren't getting up through the call line early. That all got rectified later because that got to scratch the itch of those of us who wanted to play calls. But for the put clan or the bears or whatever you want to call them, this was a beautiful entry, and it worked as they often do. So we were going from here down to the pink line. Now from 540.29 to 540.97, that's about a 70-cent move. That pays pretty well. And in this case, you got anywhere from 20 to 25% out of that trade. I got 24.1. If you held a little longer, you could have squeezed a little bit more out of it. But with these early morning trades, we're being aggressive. And so we're looking to get in and get out quickly. I don't want to be caught up in what the market is deciding that it wants to do for too long. But Qs, the point is Qs were moving down through support, their pink line. ADD at the time was printing a red candle off of a couple of decent red candles. And and the majority of the market was red this morning in the top 10. So things looked heavier than they looked lighter. But anyway, nice trade there. We bounced up, hit resistance. Now we had some reports coming in at 9:45, so I wasn't going to get into any trades leading into 9:45. And no, No, we didn't have reports at 9:45. All the reports today, I'm thinking of yesterday. All the reports today were 8:30, and then we worry about the 10 o'clock candle. That's what it is. But when we moved up here and we put in a lower high, we were able to draw these wedge lines. Or at least the downtrend, right? So we were wedging down. As we know, wedges to the downside typically break low. Not every time, but most of the time. This is what we're doing. We're playing probabilities. When it doesn't make it back down to the low that it came off of, then you have to understand that you're in a wedge, not a downward wedge, not an upward wedge, just a wedge in general. You don't want to buy a position in the wedge because it's just going to get more and more concentrated. And unfortunately, in this scenario, you don't know who's going to win because it could go either way. Now, one would argue it could go either way anytime, and you're right, but I've looked at enough charts and watched enough that it's not really that way. It's not a 50-50 chance. If we are wedging down to support, you're putting more and more pressure on that support with every lower high that you got. More often than not, it breaks low. Now, you should wait for confirmation of that break, but many of us like to get in a little aggressively, and we will buy as the wedge gets tighter up at the top of the wedge. The beauty of buying at resistance of any kind, especially during a downtrend, is that if we break above that resistance, that is your stop loss. Okay? It gives you the opportunity to get in and out very early without much loss, with the potential that if the resistance holds, you're going to start to see green in your trade immediately if you bought puts at resistance during a downtrend. Okay? But lo and behold, the wedge broke low. Now, we don't want to just jump into puts because the wedge broke low. We want to wait till we have room to the downside, meaning there's no support we got to worry about. I was really concerned about the pink line, which is why I got out here, but then it proved to be a solid level of support. So you're not going to buy puts here if you expect that the possibility of this pink line might hold the support again. There's no room. There's no room. Of course, there's always a chance it might break, but I want to tell you something. Do not get into a trade because you hope something happens. Okay? Because you could hope all you want, but if that's a strong enough support, it doesn't care what you want. Okay? Trust the chart, not what you want to happen. Of course, we'd like to get into puts aggressively. Of course, we'd hope for it to break and then be excited if it did. I'd prefer to wait for the better odds of winning. Okay? Well, we broke right through that line of support and made it right down and closed below the next line of support. For me, that means we are likely to continue at least down to the next line of support. But we have 10 o'clock coming. I don't like to hold through trades at 10 o'clock, but some people do. I'm not usually a fan of that. But wait for the 10 o'clock candle. See which way it's going to go. 10 o'clock held us below resistance, pushed us below support, also pushed Qs below a line of support. That's a go. That's a go for me. And at this time, I think ADD was starting to sell off. Yeah, big red candle on ADD, and we started to move down. All right, so all things were in our favor at that time. Let's go for it. All right, let's go for it. Was an excellent trade. That one right there ended up getting us right around 41% from in to out. Now, we got out. I got out here at 10:03 because Qs were smacking down into a level of their support as well. And I think shortly after that, ADD was still selling off. So yeah. So at that point, I got out because it was a line-to-line trade for me. I was pretty happy about that. The next one I took was on the way up, right? I felt comfortable about calls, but I want to explain another thing to everybody because I had some people who had a put bias who missed all of this. And there's going to be another video coming out maybe this week because I'm getting more and more questions about why is this working? Why is that not working? Why do I keep having the same mistakes? Why do I keep doing the same stupid stuff? Guys, there's reasons for all of this. Okay. And most of it is emotionally charged, right? Your emotions are taking over your trades. You're not allowing the chart to give you confidence in what you should be doing. You're allowing your heart to tell you what you should and shouldn't do. And that's not a winning proposition, okay? We all want to be rich. We all want every trade that we take to be winners, but that's not the reality. So we have to rely on the chart to tell us when the odds are better for our likelihood of winning and losing. And respect the chart, not your heart. Likewise, we pulled back, okay? Same thing, guys. Lower highs, what's likely to happen to support off of lower highs in this trade? I told everybody I would wait for a breach of this double bottom here on SPY and the double bottom here on the Qs. If that happens, we should have a nice move down. Now you have a lot of lines of support here on the Qs, but momentum at this point in the market was down. So we're just letting the weight of the market come down with us. And then once again, we get down to support. Again, you can consider taking your profits. If you don't want to get out of the trade, simply put a stop loss in so that if support does hold, you get stopped out in profit. If it doesn't hold, you hang on for the ride. Okay, well, we made it right down to our third target of the day and bounced right the hell off of it aggressively. So in this move to the upside, we were talking about right here at 1018. Guys, we are putting in a higher low. Puts are off the table. It doesn't mean buy calls here. Just means as long as the buyers are getting stronger, you don't want to be playing puts. So this means, no, I would not buy puts at resistance. We have already taken out a lower high to our left. We've turned it into support. This is not good for puts. How many people bought puts at this time after this candle? 5. How many red books were in our poll this morning when I took the rest of the day because they said it was okay at 11 o'clock? 5. 5 people played puts after the higher low. 5 people lost to those puts and had a red day because of it. It is important that you realize when the odds go from being for you to being against you. Higher lows are bad for puts. Please, please, please drill that into your head. It will save you a lot of agony. It doesn't mean you can't successfully make money on puts after a higher low is put in. I'm not saying that. I'm just saying that the odds are going against you at that point. So play with the odds, not against them. All right? So with that, we recognize this right away. So puts are off the table. When would you be interested in buying calls, Jimmy? Well, at this point, once we got through the next resistance up, I told everybody if SPY and Qs can get, well, we needed SPY above this resistance right here, okay, at 539.86. And we wanted Qs above this resistance right here, okay? This was this double top right here. This is what we wanted. We got that candle close on the Qs at 1023. Our entry candle was 1024, lines up with SPY and Qs breaking resistances. It moves up, holds support that we just got over, turns resistance into support, and up we go. Now at this point, I wasn't overly excited about trying to hold through some of these tough areas of resistance right here, okay? One of which was on the Qs. The first target we were looking for of resistance was right here, okay? Right here. That was right here at 1029. And I believe that's where this circle is. Yes. So again, I wasn't being overly aggressive on trying to play calls yet, but I knew where I wanted to get in. I knew where I wanted to get out. Okay. And that right there ended up being a 36% winner. It was pretty fascinating. Now, the other thing I wanted people to be aware of and why there's no new white arrows here telling people that they should get into trades is because of the level of this resistance. This was a strong level of resistance. It became a situation where we said, guys, if you missed out on calls, let's wait till we get through here because then we have room to aim higher, okay? Well, if you waited for the breach at 1043, Qs, I think, were also breaking through resistances at the same time. They sure were. Actually, yeah, 1043, Qs just broke through its resistance and up we go, okay? So we decided, hey, Qs made it to the pink line. Let's see if we could get a pullback to support. If that holds, that's a great entry point. 1048. Pulled back to support on both Qs and SPYs during an uptrend. let's take it to the next line. If we break through that resistance during an uptrend, we're looking for the move to move up to the next line. If you miss that opportunity, buy the pullback to support. 1055. SPY was on support. 1055. Qs were on support. Guys, look for confluence in the market. It's all over the place. You just have to wait for it. And then you got to trust it. It works. Yes, we're getting into and out of trades, and it seems like we're not holding on to them long enough. The fact of the matter is, nobody knows how long any move's going to last. What we do know is where at some point or another, it stopped moving in one direction or stopped moving in the other direction. That is why we aim to get in when we break some of these levels and get out when we hit the next one, because you don't know when the last one is going to be the last one. I am positive that there are people who thought this thing was going to sell off another $10 after this and probably had a put bias that cost them a small fortune. We just don't know where these levels are going to exist, so protect yourself with a trailing stop. You do not have to get out of these trades when I do or when I suggest you should. You do not have to get out of these trades for every line of support that we hit in the downside. But please trail your wins so that you don't get caught up losing on what was an epic winning trade. Because if you don't think it happens, I would tell you to reevaluate and reassess that thought process. Because how many times have you been in a winning trade? You decided to hold on for more. It pulls back, although you're still winning. You're not winning as much as you were. And boom, it happens. You start holding that trade, hoping it gets back to the winner that it once was. And the sad part is, if it never gets back to that point, you will hold it until it does or goes to zero. And we call that, friends, holding and hoping. I know it happens because it happens to me if I don't respect my stops or if I don't take my profits where I originally planned to. I don't like to play that game because I know it's a weakness of mine. If you know that this happens to you all the time, please stop doing it. Stop doing what you know doesn't work. I'm getting more and more DMs of people saying, Jimmy, I understand everything you're saying, but how do I stop myself from holding and hoping? When I don't do that, I see positive gains in my account. I feel better. Things are going in the right direction. But then there's always once or twice a month where I hold and hope and it ruins everything. Of course it's going to ruin everything. Guys, I cannot fix that for you. How do I fix it for you when you know when you do the right thing, you get positive results, and when you do the wrong thing, you get negative results? I can tell you that every single day, just like I do in our community every single day, yet you still fucking do it. Why? If you know that it usually doesn't work for you and you know it's prohibiting you from doing what it is you want, for many of you, it's to day trade for a living. Why do you keep doing it? Protect yourself from yourself. I cannot say it more times than I already do without just having it on auto repeat. I can't tell you something that I haven't already told you 1,000 times that is going to change what you keep doing wrong. That is only going to come from within you. You know that the right thing is good for you and you know that the bad thing is bad for you. You're making a choice. So the argument is either you don't like the good thing enough to stop doing the bad thing, or you don't yet realize that you're not lucky enough for the bad thing to work out for you eventually more often than not, meaning holding and hoping does work sometimes. And on the times that it does, we incentivize ourselves to continue to do it because the last time I did it, it worked out. Right? And then on the one time you decide that you're going to do that and you blow up your account, you're going to say, man, I don't understand why it didn't work. It seems like every time I hold and hope it works. No, that's your brain deceiving you. That's your emotions deceiving you. You've got to stop doing it. So my answer to the gentleman who asked me today, how do I make myself stop doing this? As if you haven't heard me say it 1,000 times, start using a stop loss. Don't move it after you put it. Trail it if you want to move it, not back. You never move a stop up. You move it down to trail your wins. You don't make it farther away as the trade's going against you so you could stay in it longer. It's dumb. It's dumb. But I know it happens to a lot of people. Guys, it's frustrating, and I'm sorry I'm having this little rant. It's frustrating because you know what happens to you when you don't do what you're planning to do, which is stop out at specific levels. Okay? As one of my good members, author of the book, he says, I go to the doctor, tell the doctor that every time I hit myself in the head, it hurts. Right? How do I stop that, doctor? Doctor says, stop hitting yourself in the head. All right? If you hold and hope and you realize that more often than not it hurts or it undoes everything that you gained progress-wise for doing the right thing, stop fucking doing that. Stop doing that. Use a stop loss. Protect yourself from yourself. All right? With that, we're going to wrap it up, guys. Today was a fantastic chart. Up and down and then back down again. I want to show you guys one more thing. I was gone after 11 o'clock this morning. But right before I left, I had told everybody in the community, I said, guys, I wouldn't touch puts until we can get below this white line. Now, that white line is one that we drew here from a solid level of support right here at 542.28. I'll transfer that over to the SPY chart so I can show you guys. Okay, let's put it here, right there. And then on the Qs chart, we had the same white line at 462.39. All right, which was, we already have it here. So if Qs and SPY get below that line, I'd be good for puts. Well, at 246, we got both things true. Down we went. Where you choose to get out of that is up to you. We move back up, and once again, after coming back down on both charts, you got in here because both Qs and SPY were below their white lines right here. And down we went, right into the close. So you had the opportunity, even after I was gone, to make that was a massive move to the downside if you happen to get into that. So kudos to anybody who was in there. Like I said, I was out at 11 o'clock this morning. And I hope those of you who remembered this took advantage of both those moves. They were both bangers of a trade. With that said, hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, we'd love to have you. There's links down below. If first week's completely free, if you like what you get for that free week, consider becoming a paying member. And that's pretty much it. Thanks for watching. I hope you guys made a killing today. Until tomorrow, I love you guys. See you.